This is a little bit deeper dive on our income and expense projections. There's literally nothing to enter in on this page. This is results only. It all comes from all the various worksheets that we have in here and all the deep data that was created. So this is automatically entering what's the forecast start date. That actually comes from your G&A input page that you enter in when you program this along with the name of your business. And so that will automatically show up in this area right here. It sets the dates for the 60 months of detailed projections and then the 5-year summaries. Gives you the total revenue, all the direct expenses associated with whatever type of business you're operating, the management and supervision. Labor is your direct labor is included up in here. Any management and supervision or other direct operating costs associated with this department are all factored in here. So you come up with a gross operating profit that now you're going to pay for all the other expenses in your business. And this is where the general and administrative expenses come in. All of these are ultimately coming from your G&A input, where you had all these fields to program in your specific G&A expenses. They flow directly into this right here. If there's any unused areas, these areas can be hidden so they don't become part of any printouts or PDFs that you're creating. So they can just be hidden very easily and they're not going to show up in whatever you print out. So same thing can be done here, but this is going to pull in all your G&A expenses, drop it in the months that they were programmed for, and then just like our G&A expenses, it's going to come down, tell you what your debt service and loan payments were, what is your accounts receivable balance and the bad debt amount for that particular month that we had discussed in another video, coming down and applying factors for cash flow if you're going to offer any terms to your customers, payment terms, 30, 60, 90-day terms. So that'll get reflected here also. And what this then gives you is what's your net cash flow for that month. Were you running positive? Were you running negative? And then it's going to actually look up this whole row because this is really a cumulative of your cash flow. So this is going to look up what is your lowest cash flow, net cash flow for the whole 60 months. Then your beginning cash capital, this just comes directly from the G&A input that you entered how much cash you're going to start off in your bank account. And then it's going to take a look at what is your minimum cash on hand so you can manage that number. So this is your cash flow calculation.